Hello, everyone. Welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans. Don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. I hope you all having yourselves a great summer. Guess we're kind of halfway through it now, eh? Let's see if we can load up the crypto show and make sure I'm live and coming through loud and clear. Chris does such a good job loading all this stuff up. Let's head on over to YouTube and let's see what we have here. Hopefully on the screen you see our newsletter offering for this past week. Oh, there's a few people over there. Hello, Nore. Nice to see you, regulars. German bodybuilders. Be interesting to see how big Nore's gotten versus when we saw him in Portugal. Jesus, that's a few years ago now, eh? Time flies when you're having fun or you're waiting for the next bull market. I see Elso. Hello, Elso71. I see Adam C, our Sacramento Slap Pro. Hopefully you're doing well today. Oh, lack of people in the Zoom call here today. Just Chris and myself. It's interesting to see how slowly the enthusiasm of the space is kind of waning here a bit. I don't know whether you guys are noticing that or not. Hello, Scott. Scott says, good morning. Jonta Ray. I don't know if I'm pronouncing your name correctly, but hello. And MM. Hello, Brian and TRI. Hello, MM. And whoever else is watching. We got about 20, 30 people here. So hopefully I can make a positive difference in your people's lives today. Although I do believe that crypto is now kind of grown up to the point where I think it's actually acting a heck of a lot like the broader market. And in the summertime, of course, we all know where the pros are. Actually, there's your first trivia piece of the show. Let's see how many people are professional market participants, which means you know exactly where the professionals from Wall Street are right now. I'm just fixing a picture of my baby. There's my baby. Lily. That's actually about 20 years ago. Oh, God, I can't believe how time has flown. Anyway, she'll have a great afternoon with him this afternoon, driving around the Lower Mainland. Of course, your best wishes are always appreciated whenever we're wrestling with all these people that have learned how to drive and who knows where. Because I tell you, they didn't learn how to drive in Canada. That's for damn sure. Anyway, MM says you do. All right. So no answers to my question, eh? Nobody knows. Actually, Chris actually deals with the professional futures trader community now, being Mr. Prop Firm Trader now. So he probably knows where most of the professionals are at present. Mind you, actually, I don't know where the Chicago boys go for summer vacation. Have you ever heard them actually make any reference to any sort of
I think
summer?
Patak goes to I don't know, somewhere to ski a lot. I don't know where that is. Somewhere close over there.
Yeah, well, I mean, his
And
nickname
snowboard and all that.
before was Nebraska. So, and you ever seen the movie Dumb and Dumber? I think you
Yeah,
have to
yeah,
go through Nebraska to get to Colorado. I think that's how
yeah, yeah.
it was. So that doesn't surprise me. But I don't know where the Chicago guys go for the summertime. Anyway, I was hoping everybody. Hey, there you go. Somebody got the answer correct. Although I don't think Lucas is from North America. So you hear me say Hamptons. It's actually Hamptons with an H, Lucas. But hey, what the hell? You're the only one who answered. So 5 points plus for you. Anyway. And for whatever it's worth, although it's not really worth a hell of a lot, if you are in China and you want to know where the people from Bay Street go, in fact, where's even our TA is usually here on the weekends, but she's not even here on the call here today for level one. But anyway, in Canada, they all head up to Muskoka. So cottage country, they call it. Anyway, so the point of the matter here is I'm feeling as though crypto is maturing. And frankly speaking, when I first got into this space, we used to talk about coins having like less than $1 million market cap and then running these things up to like, 10 million, 100 million market cap. Now, and especially with all of these exchange traded funds coming out, um, it's going to take like literally billions of dollars to move this market now. And, I suppose with the silly, funny money fiat currency world that we live in, it's probably now like trillion. And I hate to say it, but, I think being a millionaire is kind of like last century, having $100,000 net worth. Literally everything, just add another zero onto the end of it. So I don't know. Do you have to be worth 10 million, 50 million to actually be considered wealthy? I get the impression that's the case. So anyway, long story short, blah 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 blah. This is what we'd call the summer doldrums in the stock market. That period where you can even really see it if you ever tune into CNBC. The guys that are working the desk in the summertime, they really don't want to be there. And I don't know whether you've ever been in New York City in the middle of August. Ugh, it is horrible. So they don't even really want to be in New York City. They want to be off on the Martha's Vineyard and the Hamptons and all that kind of stuff. And then the guys who weren't really part of the Ivy League, they weren't really part of the in crowd, they would go up to like Kenny Bunkport. So actually, there's an interesting piece of trivia for you. Whose playground in the summertime was Kenny Bunkport? If you're a historian, presidential historian, you should know whose reference that is too. But anyway, so it does feel very summer doldrumsy. I do think to a certain degree that while we're going through this very contentious political event window here through to the end of November, I don't really think you're going to see a huge move into or out of major assets right now. I just think there's just too much up in the air. And if anything, I think what's happened, and this is just purely my opinion, but I am hearing more and more people in the market talking like this, is the obvious political gaffe by Mr. Biden there and his subsequent removal from the presidential candidacy for this upcoming election. I think that a lot of market participants basically said, well, it looks like Mr. Trump's going to win here this fall. I suppose that, the Democrats have caught a bit of a wind behind in their backs with Camilla stepping up here, or Kamala, or whatever the hell she wants to be called. I don't know. I find it I do find it interesting that Mr. Trump now, if he actually wins, his only competitors for the presidency of the United States of America is going to be against two women, which I do find fascinating. Mind you, no, that's incorrect. He ran against Hillary and beat her, but then I guess you could argue he ran against Mr. Biden and he lost to him. So interesting twist of fate. If he does win, then his only wins are going to come against women. Just got to grab them by the you know what, right? And of course, we have to be politically correct, so we're not allowed to talk like that. This world can't write better fiction than reality. And if anything, write that down. You cannot write better fiction than reality. No matter how hard we tried, nobody could have dreamed up the story that we're going through right now, where the guy actually survives an assassination attempt, so much so that he actually had one of his ears blown off. Uh, you can't write better fiction than this. I mean, you cannot. It's impossible. So anyway, my hunch is, whatever it's worth, Mr. Trump is going to be our next president, but at the same hour, the United States of America's next president, my country, oh God, I've got another year at least of this idiot that has completely driven my country into the ground. And the worst part about it is the guy that used to be the leader of our country before he was turfed out. And I suppose, this world of sort of media driven elections and stuff. Before he was driven out, he warned our country that if you brought this guy in, everything that you see happening right now, he actually warned us that this was going to happen, which is pretty freaky. Because basically all of his predictions of how dire the situation was going to be if we brought in this idiot that really doesn't know what the hell he's doing and is just purely a puppet of some higher whatever shadow government sort of bureaucracy 1% nonsense that doesn't even really care about the lives of the individual citizens of the country that they're manipulating. He warned us, and so nobody in Canada has any excuse to say that we shouldn't have seen this coming 100 miles an hour. The problem is that nobody wanted to listen to his message, but he was absolutely right. Anyway, this show isn't about China. China is kind of a minor player in the world, so I really don't really need to talk too much about that. Past week, interesting econs. U.S. economy is still just humming along here. And frankly speaking, I see no way possible that the Fed can lower interest rates with GDP humming along at the pace that it is and coming in much stronger than expected. Not quite sure why the talking heads and the media are so hell bent on an interest rate decrease in the States. When I mean, I could completely understand if GDP came in at like 1.5%, that kind of idea. It would make perfect sense for them to say, you know what, we considering inflation is still running 2.5%. It would make absolute perfect sense that they'd come in. And frankly speaking, that's what they're having to do here in China. Is the economics of this fear cycle should absolutely destroy these commodity countries. You can see that Russia is basically imploding. They've completely destroyed their economy, both from an international perspective, but also even from an internal perspective. I mean, Mr. Putin is just you just see the article after article after article about how Russia's just cavitating right now. But anyway, that's their business. I don't really care about what goes on in a totalitarian dictatorship. And I would strongly suggest all of you avoid totalitarian dictatorships like the plague. It's not the place where you want to be investing your money. That's just stupidity. Um, but countries like Russia or Australia, Canada, South Africa, it's going to be a pretty tough slog, and that cycle doesn't end for at least another 10 years. I guess 10, 11 years at least. And if anything, a country like China is at the exact same point in the cycle that the United States was at in 2007, heading into 2008. That's how dangerous the situation in China is, because the economy now is starting to slow down. They've brought in millions of unskilled laborers, and actually the unemployment rate is starting to go up. And all these people that they've brought in, that really the only reason why they were brought in was to try and keep wage pressure down, and have these people work in like the lowest tier of our society, all the sort of mick jobs, and that's what they're doing now. So uh, but a lot of those jobs are now disappearing, and I fear for this country when we actually start seeing the unemployment rate start to tick up, and all these people that have been brought in here sitting there picking their noses with nothing to do other than maybe pick up a machete and start, turning violent because they have no prospects for income going forward. It should be a very interesting situation in this country. I'll tell you that much, firecrackers. And I would strongly suggest that you just avoid these commodity countries. But the United States of America, completely different story. They are in their growth cycle, and they are continuing to grow. No doubt about it. This does look a little bit blurry though, and I'm having such a hard time with my screen. My mouse is acting all screwy here and stuff, so I'm having a hard time. Let's see, can I move this over? No, I can't. Can I move it over down here somehow? Hey, there we go. All right, now let's see, can I zoom in? Why is that so blurry? Is it blurry for you guys looking at on the video, or is it just my old eyes? Just it kind of looks blurry. Anyway, so the biggest econ I think coming out of this past week was this 2 point. I want to say that says 2.8. I can't see if that's blurry or not. I think it says 2.8. Anyway, and you can see, I mean, that is a noticeable jump in GDP. It's interesting how at that last Fed, or I guess it was Jerry speaking to the Economics Club of Washington or something like that. And he said, U.S. economy is just humming along, 2.5% annualized growth rate. I suppose you can make an average here. 50% level. We'll add these together. That's 4.2 divided by 2 is 2.1%. I think he had said that the market on an annualized basis, it was growing around 2%. So this number here came in much higher than forecast. I guess the Fed stirs themselves must have been privy to some of the data. And again, I sit here and I scratch my head and I go, how can you justify lowering interest rates? I mean, it just doesn't make any sense. This is just going to cause this number to go up even faster and harder. And if I understand correctly, people are expecting that if Mr. Trump does come back into office, that deficits in the state, you thought the deficits were bad before, they're going to go absolutely crazy under Trump. And that kind of makes sense because, I've shown you guys repeatedly, and girls and houseplants, the inflation expectation picture. And I think actually my Newmont mining chart has that on here. The inflation expectations for the end of this decade, oh God, that's ridiculous. So, if Mr. Trump comes, damn it, I can't zoom in on this. Hate when that happens. All right. Let's see. We'll go open image in new tab, and I think I can zoom in on this. Let's see what happens. Hey, there we go. Although this will probably be blurry too. There you go. Well, it's not bad. I mean, I think we are very comfortably in this scenario here. So you see 1941, 1942, we started to get some serious inflationary pressures. We just went through that. And then there's a bit of a reprieve. You notice that we actually got down in 1944 to zero. Oh, what a surprise. 2024, they're starting to talk about the inflationary pressures abating. But you notice 45, 46, and then 47. Oh boy, inflation just went absolutely crazy there in 47. And I would not be surprised that as we're heading into Mr. Trump's sort of twilight years, I wouldn't even be surprised if Trump's assassinated later on in his office, or maybe he turns into like a Ronald Reagan, where everybody just says, "Oh, well, he's just sick with dementia," and nobody, Ollie North and stuff takes all the heat for Iran Contra. I wouldn't be surprised if there's some sort of big scandal that the Democrats try to go after Mr. Trump in the his second term. I mean, hell, didn't they try to impeach him twice in his first term? So there's probably no change to all that. But point of the matter here is, if we look at these sort of like as sort of repeating 80-year cycles, I think there's like two waves of this intense inflationary pressure. And the worst part about it is the second wave is even worse than the first wave. The interesting thing, of course, from our Bitcoin perspective is we should see a really nice rally in this window here, as the Fed, of course, takes interest rates down because the inflationary pressures are abating. Do we have some sort of scandal or something that actually brings the growth of the global economy down? Like, I wouldn't even be surprised if there's actually something like some sort of implosion within China, or there's like maybe a coup or something in Russia. Something like that. That would actually make more sense than actual economic problems within the United States. Anyway, regardless, um, we should go through a bit of a reprieve here. And actually, if we look at our long-term interest rate cycle, the cost of money, um, there, and actually, I was even talking to, and actually, I think I'm going to do another one of these interviews with this guy, the Wall Street Silver gentleman, Ivan. Uh, Believe it or not, we're actually in the absolute worst. No, that's not the right way to say this. We are in the absolute best times possible. And you go, what? How's that possible? But believe it or not, this is we're just waiting for some sort of shoe to drop here. Now, this was when Trump, of course, was president. You can see how long, like the sine wave of this 4-year money cycle, you can see that it turned up here. And, I remember even specifically Mr. Trump summoning Jerry to the White House. Why are interest rates so high? Interest rates should be going down. And Jerry just wouldn't budge. And then all of a sudden, mysteriously, oh, well, now we have a sickness, and everything's going to shut down. Then boom, they take interest rates down in a heartbeat. Um, who knows if we play out this same sort of scenario? But you can kind of see, and I actually like this kind of scenario here, back sort of 2005, 2006, 2007. And of course, that was sort of the midpoint. And the US housing market, of course, that was in the US, was in the absolute worst part of its respective cycle. But I actually think that this occurs on international weakness, not domestic weakness, which should actually benefit the U.S. economy. Like the U.S. Typical sort of U.S. citizen should do relatively well. And I've been completely, how do we say this? At odds with what the public sentiment is. When we were all going through this, and especially actually when we were going through the Jupiter Saturn cross, and at that point, I hate to say it, I'll show you just because I like to remind everybody how absolutely stupid this world went. But it won't be over here. It will be over. Oh, that's funny. Is it this one? No, that's my futures trading chart. Where is my? It's one of these. Hey, here it is over here. I think I still have this on here. Let's see. Survey says. Oh boy, here we go with the scaling. When we went through that Jupiter Saturn cross, I mean, it's just such a great analogy of how stupid these humans get. But at this point, when we were when our world was being dominated by this stupidity, most of the world actually was extremely bearish of the US dollar. And that was completely the wrong trade. And I would still reiterate that I do not think being bearish of the US dollar index is the right trade. I think that's the wrong trade. But I remember specifically here, remember there used to be those four guys that got together. I remember, I think that Chak Pak guy was part of those four guys, and they were so bullish of China. China was it's going to take over the world. It's the new economy, and of course, literally since this moment, everything and anything China related has been an absolute disaster. So I do find that fascinating. And I hate to say it, but I don't see any reason why any of that would change. The next change in this image, you can't even see it on this screen. And we'll get back to, what it'll be is, and let's see if any of you guys, you're going to actually, maybe I'll do it over here. Hold on a second. This guy. So let's see. It'd be interesting to see whether any of you guys even know who this gentleman is. And wow, he looks so old now. Isn't that incredible? Anyway, this gentleman, and actually I teach this in the level 1 course. This was sort of, I suppose you could argue, my heyday. And now I'm just an old man, just an old fuddy-duddy. But there's our Jupiter Saturn cross references. Anyway, back here, this gentleman was all the rage. So I'd be curious to see whether any of you on YouTube remember who this guy is and what's the story about this guy. And of course, he was completely and utterly wrong. But he should be the hallmark of the top of the US dollar market. So anyway, there's a nice little piece of trivia for all of you. Wonder if any of you even know who that is. I'm not going to give you his name. Oh, good. All right. Adam already knows. Oh, you're awesome. Already happening in the Olympics. Yeah. Did you, we didn't even want to touch that, Omar, but holy crap. I mean, God, the Christians can't even catch a break here in this goddamn world. They even have theoretically allies making fun of them. But heaven forbid we ever make any fun of Muhammad, eh? Oh God, the fucking world will come to an end. Or I suppose Vishnu or anything like that. Mind you, I'm sure the Indians don't really care what we think. But especially like in the Middle East with the Muslims, God, you make fun of Muhammad at all, and oh boy, all hell will break loose. Yeah, I mean, I'm not going to chime in on that, but man, those opening Olympic ceremony, that was embarrassing. Can't believe what they did there. But anyway, so the point here, I guess, that I'm trying to make is that we were at a violent extreme, which is sort of like a complete anti-society vote proxy, if you will. This piece of wonderfulness. And this is sort of like absolutely in love with the system. Oh, come on, you stupid mouse. This is absolutely in love with the system, and we love the system, right? And the irony of it all is this guy, he could not have been more wrong in his prognostication of the future of the world. So we actually have to get back to the point where people are absolutely in love with these kind of guys again. And that should happen in 20. Oh, interesting. Look at that. TradingView won't even have it on the charts. It's that far out in the future, but it should be somewhere right around there. Can we do this just to make sure that it is right? Not that one, this one. So there's 1, 2, 3. And this should go to 5. And 17 and a half from basically Q3 2017 would take us to about 2035, somewhere in that area. So somewhere around here, this US dollar should basically continue working its way higher until way over here. So very unpopular, very politically incorrect, and yet actually the exact right trade is to be bullish of the US dollar. And I don't see any reason why that's going to change. I think the US hegemony is very firmly in place. I think they all great resetted us. Hope you enjoyed getting resetted. And unfortunately, there's another wave of this that comes down the road in a couple of years. And you can kind of see how this looks like a bull A, B, C, D. So we can even get an idea of where they want to take this thing. So there, if we use, the Jupiter Saturn cross, this pivot on the US dollar as our sort of basis for this rally. I can't see exactly where the numbers are. I'm just going to eyeball this. And then clone that. If we project that out off of these lows, it gives us an ultimate objective. Let's see where the hell that's taking us. So that takes us, oh, interesting. Look at that, right into an 877 and a 1699. So looks to me like the market's already getting ready for that. So that's up into there, 125 area on the US dollar index. I've been hearing a lot of people talking about, there's one guy, one Croatian guy that we were sharing his video around the site recently. And he was a bond trader over there in Europe. And he's basically predicting that the euro will disappear. By the end of all of this, there won't be a reason for Germany and France and all them to be all under one currency umbrella. I don't know. He also makes the argument that the ECB is not actually a central bank. It's nothing more than just a repository to soak up all of the socialist, deficit spending, issuing bonds out the yin yang, hyperinflationary kind of pressure out of the European governments, socialism for the win, all that crap. So only time will tell, but anyway, that's sort of what I'm thinking going forward here, which is not going to be kind of things like the Chinese, or excuse me, Chinese currency. And actually, you can hear a lot of people, a lot of the talking heads in Canada as a commodity currency. I've been telling you people all this for quite some time. And now you can actually see price action is validating this as a commodity currency proxy. Maybe we'll even go to the weekly price chart. This thing it's got nightmare scenario written all over it. So this is I think the number one reason why I am so disgusted with the leader of my country right now is that he just either he doesn't understand what his overtly over the top socialism is doing to the fundamental value of our country, or he just doesn't give a shit. And, do you think Klaus over at the World Economic Forum, do you think he gives a shit about any individual country's capital stock? No, he wants like just one world government, right? If anything, he would prefer that these currencies absolutely collapse. And then there'll be some sort of white knight that comes mysteriously out of nowhere to save the day. But it's just, yet another sort of great resetting. And, a wealth of generations just gets instantly wiped out. Thank you very much, stupid central crooks. Anyway, point of the matter here is, M's and W's. This is looking pretty damn dangerous here, folks. And of course, it was on the news that the Canadian Central Bank just cut interest rates. So the spread between the US and the Canadians is getting wider. So why would, and of course, the taxes are going up in China. All of the incentive to invest in the Canadian infrastructure is disappearing. Real estate is the only industry in this country now, it seems. So why would somebody bring their money to China? That's a potion for disaster. And now what's ending up happening is the son of a bitch is now cannibalizing the country from within. So it's stay the hell away from China. Anyway, I was not supposed to talk about this, and yet, unfortunately, it's such a big function of my life. I end up continually talking about it. So my apologies, everyone. But hopefully I've given you an idea of why, where I think the U.S. dollar is going, and unfortunately, just stay the hell away from these marginal currencies. You can see the Aussie dollars making lower highs and lower lows. I mean, just anything that's commodity related, stay the hell away from it. I suppose we ought to talk a little crypto here and just sort of chime in with my 2 cents for whatever it's worth. I do think to a certain degree that Bitcoin, number one, Bitcoin has been securitized now, no doubt about it. If you look at the number of exchange traded funds out there, it's going to take a world of buying now to lift this thing materially higher. It is the BITO. This is the one that we've been using as a proxy, because keep in mind all the others, I don't know whether all of them, but most of them don't have options yet. So as a result, if anybody in the hedging industry wants to hedge the Bitcoin exposure, they're using this BITO. And we've seen repeatedly the option bid and ask walls, in the form of open interest. We've seen them repeatedly basically bracketing price here. And I think that's exactly what's happened here. This was an interesting spread trade we were talking about up top here. So actually that's a bit old news, but I guess I thought I had it on a different screen. But anyway, we were talking quite a bit recently about the BITO options, open interest, and all that, and how they were manipulating price to keep price within these brackets. But I don't have that on the screen anymore. It's kind of a bitch. Sorry. Anyway, this is an old analysis, not really relevant. So I guess just regardless of the notes here, we can even just take all that stuff off of there. Just get rid of all that. What I would just simply say, and I did find this fascinating, is that if we actually look at this BITO from the bottom of the cycle to the top of the cycle, and keep in mind that 2016, which I think actually this sort of market cycle right now is actually a repeat of that. What I find fascinating about that is that we've already done the 50% retracement on names like this ProShares Bitcoin Strategy ETF. So technically that's actually been cleaned up. I suppose you could argue, what I like to teach in the education program is reload zones as a trade location. So if anything, if I was short, I'd use the 50% level as sort of a profit objective. And I would use good old reload zone 61.8 to 78.6 as sort of like your window of acceptable corrections. And you can kind of see big honking market structure W. This, of course, was when Mr. Fink sort of put the bottom in Bitcoin price last summer and ramped it up appreciably into his ETF event, which maybe I have that. Well, anyway, over here. So Mr. Fink came on social media and CNBC. I want my Bitcoin. You're not going to break my thing down until I get my Bitcoin. So he zips it up. There is the ETF event. And then, interestingly enough, we often see that the market pumps into these halvening events. So really, this is kind of business as usual. And then basically, we've been correcting now for 19 weeks. So all the people, of course, that came in through this event that were like, hey, this is easy money, just buy Bitcoin, you'll get rich, blah, blah, blah. They haven't gotten wiped out, so I suppose that's encouraging, but it's just been basically a hurry up and do nothing kind of market. And what I've repeatedly told the community here is I cannot get bullish of this thing until we actually start putting in structure, bullish structure, that is, on the other side of this trend line. Right? I got to see that this thing breaks the trend line and then gives us some reason to think up here. Right now, we're at best, we're just in a trading range. Top end of the range is your old highs. Bottom end of the range is, believe it or not, I actually think is this tail low. Right? This is really last time somebody stepped in and said, no more down, you go up, and then actually push price up. And you notice that we broke through this trend line, which is kind of a funny trend line going back off of the old highs from cycles ago. God, can't even see that high now. If we change this to a log chart, I think you'll see it a little bit better. So my mouse, yeah, so that high to that high to this high here. Of course, you can't see any of this. I've got a whole bunch of gobbledygook in there. Am I on the right page here? I guess that's over here. So this is looking out into the future. No, not interesting off a log scale. That looks very different. All right. Well, anyway, so much for that crazy thought. Just off of the regular scale, just looking at high to high, I noticed that this was a pretty important pivot here through the previous cycle, and I still think that this is support. Here you notice that, on the ETF, we banged into that. Then into the halvening event, we blasted through that. I still think we got to come back down and tag this trend line from the other side here again. I mean, it's been so significant over the years. I don't see why it can't again. Of course, nobody wants me talking like that because that means price has got to come back down to earth. But I still think that, and this is 38.2 to 50%. We have one site OG who likes to call this his pump chaser zone. Pump. Don't go and buy up top here. Wait for 38.2, 50% retracements, which I like. I think that's good thinking. And as I said there a moment ago, I think what's just happening here is that we're in a trading range. Believe it or not, the bottom end of the range is all the way down here, which is basically the mountain man level of that entire range. And we're just messing around here up at the top end of the range. And I really don't like this. If anything, what we really want to do is rip the Band-Aid off, get this thing technically happy again, and then we can start moving forward. The fact that we're making lower highs and lower lows and not really going anywhere, geez, we get any kind of selling pressure here. And all of this is open air. I mean, you can see just based, if we just look at the range from the cycle low, which is that low right there, and we look at the profile, you can see that value is sitting right around the 50% level. That's what should happen. And it's interesting, that BITO, like I showed you, it did its 50% level. So it actually did do the correction. But the problem is look at this. It just did it with all these holes in the chart. That's not healthy. I don't know. And this is just a gnarly old technician just talking to you. I don't like the look of this. Doesn't look good at all. Doesn't look like the base of a new bull market. One thing that did jump out at me, and I think if you're thinking bull market, I really liked how last year, Mr. Fink came in, I want my ETF, right? And he launched the market higher. And in like 1-2 weeks, you've heard me say too far, too fast kind of idea. That's just too much in just such a short period of time. Market has to ultimately come all the way right back down against these lows. And then it starts Wing out and basing off of this low. And that's what I think we need to see to actually set some sort of floor for this thing to rally appreciably off of. So as long as we're making lower highs and lower lows, we went cleanly through this low and even closed below it, it's very difficult for me to be overly bullish. So is this one of these too far, too fast? It just like literally went V bottom straight up. Yeah, yuck. I don't like the look of this, but anyway, doesn't matter. I'm just one other guy in the marketplace. And if anything, for this to move up, you need enough guys like me to go, I don't really like this. If everybody, including myself, was like, yep, buy Bitcoin, you're going to get rich, right? Then we know for certain the damn thing's going to go straight down. That's just so ironic how this silly game works. I guess what I would say here is if we look at the daily charts, were there any sort of hints that maybe there was going to be problems as we came back up against the top end of the trend line here? This is the daily chart. Something I've been talking to you people about recently is I've noticed that these rally windows seem to be about a good 20, 21 bars. So you can see this pivot low all the way up to the top. And then we had like 48 bars of correction. And then from the bottom all the way back up to the top was just about 20, 21 bars. And then we got to go through 48 bars of correction from top all the way back down to the bottom. And notice there's our bottom and 20 some odd bars. Well, here we are right back up top. And lo and behold, look at what we've got staring us in the face here this coming week. So I've said repeatedly that I'm not quite sure how the hell the Fed can justify thinking about lowering interest rates if GDP is coming in at this very strong pace. I think what people are pricing in now is we're not even going to think about next week and interest rates for next week. We're going to be thinking about September. And I'll tell you one thing, you actually sitting here in the middle of July and telling me that you know what the economy is going to look like in the middle of September, I think that that's asking a bit much. We've actually seen repeatedly over the past 6-8 months, people have been saying, we're going to have 3 interest rate cuts here by the end of the year. And now even the Fed themselves have been saying, yeah, we're going to cut interest rates. And then it turns out that, the data doesn't really support the idea of cutting interest rates. So they have to end up backtracking, and all these futures bets about, they're going to be lowering interest rates this many times. And there's an 87% chance that in 30 years, me playing the market, I've never seen that following those people and following what they're saying, it works. If anything, what ends up happening is people start looking at those futures bets. They start saying, there's an 87% chance of a rate cut. And then all of a sudden, mysteriously, a data point comes out, and then boom, instantly those percentages disappear. And they're left with egg on their face, and all the social media people that were like, this is an absolute lock. So I don't even think it's even bother wasting your time going down that road. And I do see a lot of people on social media, they get totally wrapped up in that stuff. And I don't think it's in your best interest. I think it's a waste of time. But anyway, again, it's what makes a horse race. Um, so people they're not even looking at this FOMC meeting coming up here. But I could tell you, with this core rate coming in fairly firm, I mean, it's not going down. You can see that the forecast for things like the price index was actually for flat, and it came in higher than expected. Personal spending still very strong. Personal incomes not coming in any stronger. In fact, like coming in a bit weaker. Not really anything to write home about like sort of month over month ticking up. How can the Fed be thinking about lowering interest rates if these numbers are ticking higher? So I suppose they're hanging their hat on things like durable goods orders coming in pretty down. But what's interesting is if you take out volatile transportation sector from this durable goods orders, it's actually flat. It's not really like people are ramping up the purchases of washing machines and dishwashers and stuff like that, or ramping down. I mean, I think I can show you. Really what's happening is this is all about like is Boeing selling more jet airplanes and stuff. If we look at the econs, and we'll put on we'll look at the stuff that people are not really that interested, only one star. Tuesday, this is not, oh darn it. Well, that's going the wrong direction for them to lower rates. Okay, we got one star. Come on, you. All right, and then we'll go. I guess we're gonna have to go previous week. I guess that's what we have to do here. And we scroll all the way down to Friday, and was it Friday? It might have been earlier in the week. Here, durable goods orders. There we are. Durable goods orders X transports actually came in up when the market was actually looking for 0.1. It came in 0.5. So if you take it, and they always say, right, the headline durable goods orders, this includes things like jet airplanes, locomotives, right? And they always say, be careful reading too much into this, because this might just be something like Boeing didn't land a contract or something, or didn't deliver a 747 or something. And so as a result, these numbers get heavily skewed. But if we actually look at the durable goods orders and take out the transport sector, actually this ticked up. So there's another reason why, I don't know whether I keep seeing that there's not a lot of reason for the Fed to like get super excited about lowering interest rates. Interesting for the advanced reading of the core PCE, right? You can actually see that still 2.9, better than forecast 3.1, but well above the 2% desired rate. So again, can you justify cutting rates in the face of that? I don't know. So anyway, I guess just the point here is I just don't see enough data here that Jerry's going to come out here and say, yeah, you know what, we've got the clear light to start cutting rates. We'd have to see in August here some more weaker data points for them to really justify. And the interesting thing is that August, September usually is an interesting month. I mean, September is the US fiscal year end. So as a result, you see a lot of monkey business around that. And as well, do you think the Democrats are going to let the economy soften here heading into the election? Does that seem realistic? I don't think that seems realistic. They are going to do everything in their power to try and have inflation as low as possible and GDP growth, everybody's got a job, all that kind of talk. as strong as possible. Because if they start actually letting the economy weaken, then that plays right into Mr. Trump's hands. So anyway, what else can we talk about this past week? Obviously, the political situation is definitely, a little bit of a conundrum there, no doubt about it. Talked about, of course, the Econs coming in, I think, a little bit stronger than expectations. And your good old Bitcoin. I think Bitcoin also too caught a bit of a bid because of this Bitcoin conference convention. I'm not quite sure what you call it. But anyway, that happened over the past weekend here. And Mr. Trump coming out and having a grand speech and talking a bit about how much he loves cryptocurrencies to the audience. I get the impression that this is more just sort of trying to curry political favor. The statement that he had at the actual conference I thought was hilarious. Have a good time with your Bitcoin, not our Bitcoin, not my Bitcoin, not the United States of America's Bitcoin, your Bitcoin. Interesting words. And your crypto and everything else that you're playing with. Is there a Melania Trump NFT somewhere in there? I think so. But that's not exactly what you really wanted to hear out of Trump. And I think that's half the reason why the market kind of went soft there following his presentation. If you actually look at the lower time frame charts, we actually, into that event window, we actually had a pretty nasty bearish divergence developing on price. Price came off materially, and I think this was sort of like the official start to the actual convention. And actually, what I even posted on the site last night was actually, I thought this was a fairly well-defined actual trade setup. Unfortunately, I was on my laptop. I'm on the big computer right now. So where was that chart that I posted? So last night, when I was on the laptop, what I did find interesting was this is a pretty significant trend line. Looking at some of these just sort of static images, like I said, from the laptop. Oh, we'll load that guy up. This was the lower time frame chart, and this was that major market structure trend line off of the top, right? That's what this trend line is, which I think is what's dominating price right now. We were starting, like I said, we actually started to get bearish momentum divergences developing as we were coming into that event window. And in a weird sort of way, this actually, I think, represented a rational trade idea. In that, I don't know whether I think I did mention it. BITO, for example, I strongly suggest everybody use the 50% level as sort of your profit taking objective. If you're just going to trade the market technically, this is not a comment about Bitcoin's long-term future. This isn't a comment about fundamental analysis. This is just nothing more than this market moves straight line up. And what's the natural healthy thing for this market to do is good old 50% retracements. Did this actually satisfy that 50% retracement? I don't think so. But the market will do whatever the hell the market wants to do. And that dump actually confirmed all of these divergences that you see on all these indicators. So as a result, the counter trend rally of that dump, this actually set the market up into a really interesting trade location. Look at that. So, the basic premise is that if I ever want to take a trade, I'd like to have three unrelated reasons to justify taking the trade. And I'd like to see at least 2-to-1 risk reward ratios traded to justify the risk taken. If we use the 50% level as a profit objective, you can see that's like 2.56 to 1 risk reward. That's not bad. As we said, and actually, interestingly enough, if I zoom out over this whole thing, if my stupid mouse will work, look at this, just fighting me with it like a dog. And this is one of these optical mouses, so I'm not even quite sure why this is happening. Oh, come on, you piece of crap. Where is there? It is. That's what I want. I have to use this because I can't use the mouse. All right, so there's the original double top. No, that's not the original double top. Beg your pardon. There's the top way up there. So it's kind of difficult to see. How am I going to do this so you can see this without? Fudge. Oh, actually, yeah, this will work. It's right here. So the range, top end of the range, bottom end of the range, reload zones. That looks like trade location to me. Back against this trend line, right? Trend line resistance. Can't really get a buy signal here until we actually get structure on the other side of that trend line that actually validates that, yep, that trend line's been lost. I mean, you saw what happened here. Don't take that trade at that trend line. You're going to get smoked. Don't take that trade at that trend line. You're going to get smoked. Don't take that trade at the trend line. You're going to get smoked. I mean, this is now what, 4 times? If anything, this is a good sign for all you bulls. This market, and keep in mind, Mr. Fink, of course, is completely manipulating this market. I don't think he wants to see Bitcoin go down. But this market is just, it is stubborn. Hey, it's just fighting like a dog right here. And I'm worried that the reason why the market is as firm as it is, and I wouldn't even be surprised if there's another push higher here, aside from this bullish structure, because we got the FOMC coming up here. And I've seen that this market loves to rally into these FOMC events and Fed minute events and that kind of stuff, and then just completely reverse. Like this Fed minutes event was just incredible. So I don't know whether this is the catalyst that stops the market, but I do often see that happens. And because the Fed is meeting Tuesday, Wednesday this week, I'm probably not going to be doing much futures trading, maybe scalps here and there, but there's not going to be any monster trades like we had last week in the futures land. I think this is probably going to be like chop Vegas here, and I wouldn't be surprised if it's the same thing on Bitcoin. And actually interesting, just on the daily chart, what is this pattern? Let's see if this will zoom in. And it's interesting that, come on, oh God, how frustrating. It's interesting how this pattern is happening right at this trend line. So you can see the market did kind of want to break down here, right? Like I said, a nice big fat doji right at that trend line. I would actually say that we probably won't get a signal here in the short term until either of these two extremes are taken out. And we go back to this chart. What this is really saying is, as I had said there a moment ago, and now this is an hourly price chart, so we're talking lower time frame setups. But I think that actually there was a really polite little short setup that came in there yesterday. So I think that this sort of sell-off late yesterday was kind of like the crypto community was kind of disappointed that, Mr. Trump kind of said, your Bitcoin, your crypto, all that kind of stuff. Didn't really endorse it. I did hear one thing that actually made me kind of interested was he said he was going to commute the sentence of Ross Ulbricht or however you pronounce that guy's name. So I don't know. He's throwing a bone to sort of the crypto OGers, I suppose. But that's an inside bar reversal right there. So that's actually a legitimate sell level. And as we had said, we already had bearish divergence in indicators. So you had trade location, reload short zones. You had indicator confirmation, Willie stupid, MACD bear divs, rising volume. So this actually to me looks like a perfectly legit trade. One thing I will say here, though, and I do find that when students do get into this habit, it probably saves them a lot of headaches in that we can actually use the fun little bot trading rules on things like this is what I called an L Tangonator setup. Just simply because we had a South American on the site years ago who absolutely loved this setup. And yeah, we're like, what the hell? Why don't we call it L Tangonator for you? I think I even tweeted it out last night. Oh, that's nice. What's happening here? Will the mouse let me go down? There we are. So here was the tweet. Inside bar fail. We are at trade location, trend line resistance, reload zones. Momentum, confirm momentum divergence. Willie stupidly overbought. This is basically all Tangonator. One thing though that I did notice, I didn't put on this chart here though, and you can see that the market did come off a bit more overnight. But I'm like our level 1 instructor, he does this, and I gotta say I'm pretty impressed with the way that people have taken these concepts and basically added their own personal flair to them. So the bot trade, we want to and let's go like that. We don't need all this. We don't need this. We don't need this. So the rule, of course, is that 50% of the anticipated move. It's probably a good idea. It's in your best interest to move stops to scratch. So at the very least, you don't lose money. So you can see 50% of the anticipated move was right there. So I think at the very worst, at this point, you would just simply have your stop at scratch. So had you taken the inside bar, you were gunning for 50% level tags. But interestingly enough, and I noticed that this morning, this is one of the reasons why having sort of trading rules in your setups can kind of save you headaches. So at 66% of the anticipated move, theoretically, we get permission at that point to actually start locking in profits. And how do you lock in profits? Well, one way is if you happen to see bullish market structure. I do teach the 3 high-low method in our level 3 program, which would probably be more on like a lower time frame basis if we maybe looked at like a 10-minute chart or something. Yeah, so you can see at 50%, you have your stop at scratch. Then every time we make lower market structure highs, then that's reason to move your stop. So you can see here, in fact, we even have an M and you have an M within an M. Could you make the argument that you'd start moving your stops down and locking them in as all this bearish structure starts coming in? I wouldn't have a problem with that. But also, too, hopefully what you can see is, gee whiz, this, there's another M that came in. Do I move my stop down here now? But also, hopefully what you can see is on the 9-minute basis, this this would be a good trivia question for you. I won't give you the answer. Let's see if you can post it in the comments. I don't know what the timestamp on this video is right at this moment, but what candle is that? And is this enough of a justification? I'm a trader. I'm trading off like a 10-minute chart here. I shorted the off this 10-minute chart. You can see how it's a double top breakdown, but it was the inside bar failure off a higher time frame chart. Market hit 50% of my anticipated move at this point, so I want to move my stop to scratch. It hit 66% of my anticipated move. Also, too, notice that it came down and filled in a gap with some tails here. Technically, that gap isn't filled unless the candle body trades down there. So I wouldn't be surprised at some point down the road we actually have to trade back down there. But, as I said, I live in a trader's life. Schizophrenic, always worried about losing money. Can I actually justify, moving my stop to lock in profits? I really wouldn't have a problem if somebody had said, well, on this W pattern, I just got the hell out of there and just took my money and ran. I wouldn't fault anybody if they had told me that. Having said that, absolute worst case scenario at this point, had you taken these shorts, is you should have your stop at scratch here. And if this thing does work its way back up to these levels, you just get the hell out of there. I think probably for the purposes of this demonstration, I didn't actually strap this trade on. I don't have any sim or anything here. I think I would probably just simply say, look at if we do trade back up to these levels, it's probably best to get out. I wouldn't be surprised if this old trend line actually comes back and re-exerts itself. And this is actually a really good lesson for everybody. There's a couple really cool learning points. So this, I think, is a really good learning piece right there. What is that? If you are a lower time frame trader, I think you really had to respect that signal. And then, like I said, probably that's your signal to take profits and get the hell out of there. Also notice too, look at that. There's another W that came in down here. So one of the reasons why I don't really like trading off of these lower time frames, unless I'm trading futures and scalping, is you can see, there's M's, there's W's, there's M's, there's W's. I mean, this is actually half the reason why I don't like looking at lower time frame charts and doing these weekly shows is, you're going to be like, well, there's a buy, there's a sell, there's a buy, there's a sell. Man, you're freaking me out here, Brian. There's too many things for me to be looking at here. So what I would just simply say is, and a good learning piece for all of you, is when you have these long-term trend lines, what you'll often find is that markets will consider this trend line as resistance. Then if they can break through the top, it will become support. Then if it breaks back down below, it'll become resistance again. Then it'll become support, then it'll become resistance, then it'll become support, then it'll become resistance. And I think that's exactly what's happened here. So there is that higher time frame trend line. If I can get this stupid mouse to cooperate. Boom, 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 boom. So notice resistance, backed off. Resistance, then it punched through there, went, all right, now it's support. And then, like I said, off the lower time frame, there is that same trend line. It goes in, puts in a nasty M right off of that, totally pukes out. Notice, look at this one candle here. Look how it rallied right back up to that trend line, doink, and then right back down, then rallied right back up, tried to recapture it. If you had gotten anywhere along here, if you had gotten like a nice W on the other side of this trend line, I'd be like, holy crap on a stick, let's go. But I don't see that, right? Rallied up, then lost it. Then now back as resistance. Then kind of fading. Oh, what a surprise. Look at what we're doing right now. So more resistance talk here. Interesting how a little M is trying to form here. So I don't think that the market is done with this trend line, and considering that the futures markets will open up in 3 or 4 hours or so after I'm long gone with Lily and on the roads, right? And that's probably this conversation. There's that same trend line. What are we going to do here? And then, like I said, I'm a little bit worried that a trap is going to be laid. Like, I wouldn't even be surprised if they gap this thing higher, which is not market structure on the other side of this trend line, kind of like what you saw here. Notice how they gapped the market higher and then went in, put in an M, and then just absolutely puked out. And notice how many days this took, right? So this is today. That's probably this candle. And then 1, 2, 3, and then we dump. Now, is anything supposed to happen Wednesday or Thursday of this week, which would be 1, 2, 3 days? And of course, that brings us back to, oh yeah, there's an FOMC meeting coming up here. And has Jerry ever pooped on this market before? I think you all know the answer to that. So I'm skeptical of what's going on here. And I wouldn't be surprised. I mean, there is no M right here right now. I wouldn't be surprised if they have a little bit of hijinks here over the next few days here. And I certainly wouldn't say, this is the top, we're going straight down from here. If anything, if this is the top, then what should happen is this should be like an atom. And then we back off. And then a week or two later, we come up and we make an Eve. and then we puke out. And then this whole pattern here creates a big happy face breakdown, kind of like what you see here. Atom, then we back off, then we take another run up. And in this particular case, it put in a really ugly Eve and then puked out. And then you could argue, well, maybe there's another Eve over here. But you can see how this very sloppy top action here. I would expect to see the same sort of thing if this is actually a top. And I don't know whether calling that now is even in any of our best interests. But I would just simply say is, look at, we're at the top end of the range. If you're a bull, it's your job to show me. I'm from Missouri, right? And, anybody who steps in here and says, you know what, I'm happy to strap some on. And if we do break out through the top of this M, fine, I'll take my lumps. And there's my risk window. I don't have a problem with that. The only issue here is off of the daily charts. I don't really have a setup here to actually justify that. So if that is your case, then give me some sort of M, something here that actually is screaming top, and then I'll be more than happy to join you again on the short side. So there's my Bitcoin sort of thinking. And I do like the idea that the lower time frame traders, I do think that they did get a pretty nice sell setup if you are trading Bitcoins. I don't know whether many people in this watching this video here in particular are, but if you are, I think there was actually a pretty respectable looking short setup that came in there. Have you been told to get out of this short here and take profits? I think for the traders, yes. But at the very least, like I said earlier, worst case scenario, at the very least, you should have your stop at scratch. And if this thing does punch its way back up into the top end of the range, you shouldn't take a loss on this trade. So that's the way I'm sort of looking at Bitcoin right now. The interesting story, I don't think is actually Bitcoin right here. I think it's more about this Ethereum. Because I do find that it's interesting how this short setup is still working away. Nothing has really changed here. And as Bitcoin's trying to jump back up to the top end of the range, this thing just isn't getting going here. So, they just had the Ethereum ETF launch. So, boom. What I found interesting about that is if you look at one platform I can't really do it. I don't have it here. But I did have it up earlier. I was looking at the Ethereum ETFs. And when I initially punched this up, and I think it was because of the IPO and the fact that it was listed on the big board, not the lower board. But when I did pull this up, and I don't know whether, here it is here. When I originally pulled this up, you only got like 2 or 3 days of data looking at this, which is really weird. I was kind of like, well, I guess it's an IPO, so I guess that makes sense. But I think I've told you before that usually they bring these IPOs out at about like twice what they're worth. So I find it interesting that when I do a 50% level on something like Ethereum, you can see 50% level is nothing more than just a revisit of this level. That's $20. Notice they got a high here. I guess they brought this thing out the better part of 30. I would actually argue that, value on this thing is probably somewhere around 15, somewhere down in that area there. I mean, they don't have to rip this thing down, but I've just found in my history that usually IPOs come out about twice what they're worth. So, I mean, hell, you saw what they did to that coin when they brought that thing out. Holy crap. So, is this chart pointing up right now? No, definitely not. Lots of gaps down at this 50% level. You can see the last time it put in W's, right? And then it took off from there. I don't see a W here just yet. So I don't see any reason to get uber bullish about this. And in a weird sort of way, kind of like what we were saying earlier. Well, actually, I don't think I mentioned this here, but I can't really get bullish on this thing until I actually see market structure signals on the other side of this trend line over here like that. So it's going to be a while here before this thing actually says I'm a bull. And one thing interesting about this is that, why why would Ethereum be underperforming right now? Right? Does Ethereum have some competition in the marketplace? And in a weird sort of way, I think that Solana is going to come along here and it's going to eat Bitcoin's lunch. So this is a Solana versus ETH chart over there on Coinbase. And to me, that sure looks like a cup and handle. What I found interesting about this is when I did I think this is a logarithmic study. Yeah. So when I did chaos theory off a log chart and I was looking at this base, what a surprise. 2.618 is basically where we rally to. That's what's supposed to happen according to Mr. Foggenbaum. But interestingly enough, if we did measure from the bottom of the cup up, actually, I think 4.669 looks like a completely realistic price objective, which to me, like, what's going on here, right? That's 0.05, and this is 30. So this is like a six-fold increase in the price of Solana relative to the price of Ethereum. So where's the opportunity in the marketplace? I don't think it's in Ethereum's. I frankly speaking, I wouldn't be surprised. This trade's getting awfully old. So I wouldn't be surprised. Let's see if this chart will work. There we are. See, here's a good example of that Adam and then Eve, right? That's what tops kind of want to look like. And this trade did work admirably. We'll only have the other half, this sort of free position on still on the books. I've been sort of humming it on about whether maybe we should just move our stop to this high here and lock in that little bit of profit on the free position. I don't know. I'm kind of thinking I just want to leave it alone. You can't get hurt, stops at scratch on this second half, so it's really no big deal. But it is interesting, right? You look at this Ethereum chart and it doesn't really look like it's rip-roaring higher at all. And then you look at something like Solana and you see that Solana is actually right up, bucking up against its old highs. And you can see that, gee whiz, that looks like a W that's trying to come in here. And are we starting to get like higher highs and higher lows on the other sides of trend lines? Yeah, it's kind of looking like it, eh? So you can see this is not a trade, but up, right? Break through that trend line in earnest, then start working your way back, then up again. God, if we get any kind of W here, oh boy, this thing could take off to the moon. And in a weird sort of way, you can kind of see that cup and handle. This is just versus dollar, but you can see that cup and handle right there. So where's the money flowing in this space? Is it flowing into Ethereum's right now? And now that the Ethereum ETH, the ETFs have been launched, I don't know. It's awfully tough to make the case that Ethereum's going to have a hell of a lot of upside here. I think you can make the case that Solana looks like it wants to go. It's leaving value and it's saying, I want higher, damn it. So, that's where I think the money is to be made in this market. And, I'll say, looking at a lot of the altcoins, some of them have already run. So unfortunately, you can't really chase these kind of names. But, has Bitcoin done something like what Cripple has done here recently? I mean, that's a pretty damn big move. Kaboom. 50% move there. Boom, boom. I don't think Bitcoin's moved up 50%. So this might be a consolidation pattern. What I've said to site members is I want to see, 3 higher lows, good old bullish bot setups, for me to actually think about participating in this. I can't touch this now. The trade's already gone. So there is a bull markets out there. You just got to be really, really careful. Like buy the W breakout on volume. And if you don't see it, maybe best just to leave this stuff alone until you actually see the higher time frame charts starting to break out in earnest. But that was Cripple. I also noticed his buddy Stellar Lumens, I think he was popping up nicely. Um, you know, but actually, and this is a good example of why you really shouldn't chase. So banged into 2.618, banged into first stop targets. So really not a big surprise that we ran into resistance here. And now this thing actually looks like it's starting to ham out. If you had chased this thing up here, you'd be like, oh, what the hell, man? I'm getting my lunch handed to me. And this thing might just have to retrace all the way back down to the bottom here, folks. So I also don't like this because if we change this chart to a line chart, you'll notice that our little W's all of a sudden just disappear. Oh, that's not so good. Remember, W's, V bottoms, they need to be tested, right? I mean, maybe you say that's a W, but at some point we had to come back down and test the low. Had to come back down, test the low. Oh, maybe that's a W, but had to come back down, test the low. So I wouldn't be surprised if there's a test of this low here at some point. And then if that low holds, maybe this is like that Adam and Eve scenario that I talked about earlier. This would be for the bulls. If that kind of scenario plays out, okay, cool. I would definitely be interested in buying a W that comes in down here. So I really don't think it's a good idea for you to chase. I really don't think that's a good idea whatsoever in this kind of market. For us to believe that, yes, indeed, we are in a new bull phase and rah, 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 up we go. I think you got to see the market blast through this downtrend line, start Wing out, and start blasting through the old highs and show us that indeed you are a bull. I don't see it just yet. And if anything, I think we're too early. We also have really big eclipse window coming up here this fall, which I think is going to be a catalyst like the eclipse window was last year. This was our eclipse window last year, and the market just broke out from that and just went ape shit. So I wouldn't be surprised if we're building up to some sort of, consolidation. And I'm not saying we resolve bull. We might consolidate here and then actually have to come back down and do the cleanup that I've been expecting all along here. So this isn't an easy market state by any stretch of the imagination. And I can see to a certain degree the overt crypto enthusiasm that I've seen in previous years. I just don't see it yet. And it does kind of make sense because, things like the total market cap, this is crypto minus Bitcoin and Ethereum. It's not a hell of a lot to get excited about on that chart, folks. It's still working a bearish chart pattern. And we're actually basically right in the middle of no man's land here. It's just not a lot for me to get excited about. Okay, well, there's your market summary. I'm sure all of you are like, oh, well, that sucks, Horsecocks. Sorry. If anything, it's probably better that I just give you the straight goods. I don't blow smoke up your butt. If you're looking to get rich off of crypto, you just got to cool your jets. I suppose the one thing that you might want to practice here is, can you float new meme coins? Because ironically enough, if Solana is outperforming, then what that means to me, and I love the idea of coming in here and buying against the bottom on a lot of these poop coins. I think this is the page I wanted to show you. So I've noticed that a lot of the universe kind of just treading water, but like meme coins, potato starting to look pretty attractive in here. I noticed that a lot of our little old ladies starting to step in and start to pick up potatoes again. And I noticed that some of the fun ones that we've been trading over the years seem to be doing well. Chris was kind of enthusiastic of this jupe. I guess, and to the point of can you float? I actually shared a video by a guy who said this is how you get rich, floating these new coins. Like there's Camilla Harris, and then it says Trump over here. I'm not quite sure how that works. There's Trump. He's up 93%. So I hate to say it, but I wouldn't be surprised if this summer is dominated by these good old poop coins and the meme coin names again. Which, of course, I think the crypto purists are like, ah, you're making me sick to my stomach. Don't mention this crap because this is just nothing more than just momentum. I would keep an eye on these like, let's fucking go. And am I actually swearing if I just say the name of this thing? Which, is a classic meme coin kind of idea. Actually, oh, it looks like he's breaking back down. Anyway, this one I did pick up a bit more here. So I did buy a little bit of that there off of this was one of Steven's names. He told us about it here and look at what it did. He got stinking rich. So on the reload zone pullbacks, I started to acquire some of this. Although not overly impressed with what I'm seeing here today. So it doesn't look like I'm getting rich today. Boo, hiss, hiss, boo. But I did notice, like I said, that Trump starting to perk up, the potato coin starting to move up. I think this dolman is like pretty popular. Oh, look at that. The Trudeau Turdo meme coin starting to perk up. There were a couple others. Actually, I was in this DETH, I think it was. That was starting to move up nicely. I just missed a double by a hair there. But I would keep an eye on these fun little names. Oh, look at that. DETH is backing off here. That's too bad. Thought I was gonna get a double on this one. So even here, you're actually seeing a bit of rotation. You can see off of this purchase here, I did actually hit my double level, but on the average cost, didn't quite hit my double level. And actually, I think I threw my order up at this 2.618 because I still don't even see any reason why this can't get filled up top here. So, this is a name that I picked up here recently. I also picked up, and in a weird sort of way, I kind of think these, well, maybe yes, maybe no. But I picked up a little bit of Danny. So if Danny starts doing crazy stuff, then we'll probably see some fireworks out of him. That's the spell. This one though is from almost like the last cycle. I don't even know whether this is still valid. He's probably working on like new projects, and this thing's just moving up because of inertia. So I picked up a little of this guy down here at 50 right off of the lows. He got up there into the 70s. You could maybe think candle body lows for trade location reload zones. You may want to think about picking a little bit of him up. I also picked up a little of this BNT. This is one of Chris's ideas that I thought was actually a pretty good looking name. Same sort of logic. Had stink bids off the bottoms here working. Coming back down into reload zones, candle body lows. You might want to join me. But again, is there anything to get like uber excited about here in the short term on a chart that looks like that? I don't think so. So, big hurry up and summer doldrumsy. If anything, what I would strongly suggest you do, if you are interested in the space, see if you can pop on TRI on Tuesdays, because TRI's CTO, Sjord, who I think is very, very smart when it comes to actually fundamental valuations in this space. He does have a FA portfolio that he's running on the site, and these are like fundamentally justifiable names to take a look at. Also, too, not a bad idea to pop on the site on Thursdays when Julian's on the call. And Julian likes to follow the social media influencers and watch the names that they've been touting. And actually, I don't know whether that's this one. Oh, yeah, I guess it is this one. And I do know that the social media influencers I think they were touting it. Well, I think a couple of these names here, and I think they're actually doing pretty well. Higher highs and higher lows. I think this is one of the ones that one of Julian's social media influencers were touting. So on Thursdays, you can get a report from Julian on social media influencer names. Look at this one. I mean, I think this is where that social media influencer originally touted this idea. Looks like maybe it was a little bit early, but gee whiz, that's not a bad looking W, especially right against all these lows here. That's an interesting name. So Tuesdays we have Sjord, who is, I think, a very, very good analyst within the space, and he gives us our fundamental justification. And actually, he wants to participate in a deal that Colin's working on. I don't know whether the public is able to participate or not. But if you are a TRIOGer, and maybe Chris, you can remind me on Tuesday to ask Stuart about the specifics about that. But Stuart did mention that Colin from Hero Exchange, and he actually did really well with Danny and Spell in the past. He's working on a deal right now. So any TRIers, if you can participate, Colin's got at least 2 or 3 horseshoes in certain orifices of his body. So I wouldn't have a problem participating in deals Colin's participating in. Anyway. Okay, so there's your report here for a Sunday. It is the middle of the summer, and I do feel as though we had sort of a buy the rumor, sell the news event yesterday with this crypto conference. We have FOMC coming up here, and really, I think probably it's in all of our best interest just to cool your jets until that is completely out of the way. And we'll see. My hunch is that they're going to say once again, there's not enough reason for us to cut rates right now. And we'll see everybody in September. Have yourselves a great rest of your summer. And then at least once we're on the other side of that, we don't have that sort of big albatross, overhanging the market. And maybe through the latter part of the summer, that's when we can actually have a substantial rally. As I said earlier, I don't know whether I really am thinking Ethereum is going to be leading the charge here. I still think it's going to be all about things like Solana and then building out the Solana platform as a competitor to Ethereum. And, I didn't show you, but, one place that I think into the latter part of the summer where I think you could make some money. And if you are sort of tech savvy, this might actually represent an opportunity is I've noticed that these new pairs that are coming out constantly, they're getting absolutely insane price rips. So this is continuing. And, for anybody who's actually really savvy in the crypto space, we shared a video a week or two ago. Maybe I'll even retweet it. I did tweet it. So by all means, follow my Twitter feed if you want that. I don't know whether the TRI Twitter feed followed it. But he basically walked you through how to actually float one of these, meme coins on the Solana network. It's probably going to cost you 1 or 2 Solanas. So just understand you are going to have a little bit of Solana on the books to be able to do it. But I mean, what the hell, if you can go and float one of these things and it ratchets up to like $1 million, $2 million market cap, you could easily clip the market for 10, 20, 30, 40, 50, $100,000. And what the hell, that's not a bad few days worth of work. So, if anything, if you are super uber active in the crypto space, you should all be doing this. If you are sort of a, public, little old lady, okay, fine, nibble away on your favorite names at the bottoms, ends, or ranges. But considering a lot of these, even this DITH, for example, I really wouldn't have, I would have problems if somebody came in and said, oh yeah, Brian, I loaded up here on this DITH up here. And I'd say, well, what the hell are you doing? Draw your reload zones, draw your trend lines, work your bids down at the bottom ends of ranges, not the top ends of ranges. And just like the one good thing I like about this DEX screener is load up all your names that whether your friends or other people in the industry, etc., are interested, and then just simply scroll through these on a daily basis, hunting for your W's on volume breakouts. You can see good old Zach here, snuck in on this W, let half of it go. just sitting here waiting for W's to come back in. You can see the first W and RSIs come in. So anybody who's followed my RSI model and knows how that works, then you know what happens if a second W comes in here, and yeah, you can see the W is trying to form in price. So that's probably the way that I would approach this, is just keep, they brought these things back down to the bottom ends of ranges. Now let's look for indicators telling us to start getting interested again. And can you find price action that can frame your risk? If you're not a little old lady and you're actually going to trade these things, can I find W's to trade against? It's just that simple. I don't know whether we had any questions. Of course, what's ending up happening lately is I just simply defer the questions to the Monday show. I've got about 10 minutes left here before I have to head off to Lily. So I'll ask everybody on YouTube, and I don't know, it doesn't really look like too many people are watching today. But can you all say a nice prayer for Liam and for Dad to give Liam a awesome afternoon on the roads of British Columbia these days. It's a bit of a challenge out there. So your best wishes, greatly appreciated. Looks like we have one question. So we'll finish off with this one question today, and then we'll head off into the sunset. So, as you mentioned, I've noticed that on lower time frame, M's and W's come in more often than on higher time frames. Yep. However, in the educational program, we learned that the world markets are a fractal. Okay. My question is, if setups are supposed to be the same on higher time frames as on lower, how would you adjust your trading on lower time frames in terms of M's and W's being not as solid, long lasting as lower time frames as on the higher time frames? I would definitely say, kind of like what I just showed you on the Bitcoin chart, everything is relative. I think that is a hugely important concept. And if you are trading lower time frames, remember we said this is like a 10-minute chart for Bitcoin, you could see the inside bar failure off a 30-minute chart. You could see actually I think it was 4 hour, the really, no, actually I guess it was 1 hour, the really pretty setup, that inside bar reversal off of the 1 hour chart. So this is a really good example where setups, the world, the universe is a fractal. I would say the world, the planet, us silly humans, we're just a small speck in the universe. And, every rule about higher time frame trading, things like, daily price charts, 50% retracements, M's and W's, right? This is now off the daily chart. So you can see the M, you can see the counter trend rally back up against the M. You can see the M within the M. This is the daily chart. Ironically enough, everything is exactly the same here. The only difference is quite often off the lower time frames, you don't get the really polite, well-defined M's. Often the reversal signals will be things like fractals. Is this easy? It's never easy. Never, ever, ever. Our old buddy Johnny Hoagland used to always say, you can make unlimited amounts of money. This is a great business, but just understand that you are paid to be uncomfortable. And if you're trading off a lower time frame charts, then you have to understand that all of the machinations around lower time frame participation, things like stop runs and stuff like that, they come into effect in this kind of environment. Also, too, look how quick this dump was. I mean, that's an hourly chart. I wouldn't be surprised if we go down to like a 3-minute chart and you find that it was just like one candle. So if you're going to participate off the lower time frame charts, you better be quick on your toes, right? So you can see the dump here. straight down, straight back up, right into the reload zone. I mean, that is absolute textbook what I'm trying to teach you. And this is now off a 3-minute chart. You can see the double top that came in right off of Brian's favorite fib. So this chart off a 3-minute chart is exactly the same as this chart. They're identical. It's just this is a daily chart. So I hope you can see this is an absolute perfect example of higher time frames, market tanks, rallies right back up into reload zones. Does this thing M out? Could be. All right, we could have done it off of this same logic. Reload zone, boosh, there it is. Market rallies into reload zone. Do you have the balls to step up and hit this M? Do you have the balls to step up and hit little, fractal failures inside bars? This was a real bitch because I remember I was short, and that little move just up top there stopped me out of a really, really good short on Bitcoin. But that's a trader's life. The worst part about this is people think that, all right, I've learned this edge. I've learned things like trade location. I've learned things like divergence. I've learned things like M's and W's. All right, now that I've learned this, now I'm guaranteed to make money. And I'm sorry, folks, it just doesn't work that way. You can have the absolute perfect, pristine setup, and yet it only works about, 60 to 70% of the time. And a lot of times, I mean, our actually, I don't know whether Chris goes through this or not, but I definitely know our day trading buddy Ed, he goes through this and it drives him crazy. Where the best place to show you this is, I think that's probably off of this 1-hour chart. But and it drives me crazy too, because I mean, keep in mind, I'm in there every damn day trying to get better and better at this to pass good old Johnny Hoagland in Nebraska's combine test again, because I've been pretty rusty over the past 5-10 years trading crypto with you guys, doing things like little old lady strategy. It gets you awfully complacent and sloppy. I think is probably the best word for it. And it's taken me a good 6-8 months to get rid of a lot of the cobwebs in my trading. I am seeing of late, I'm getting back into the groove and taking better setups, and I can see the profits starting to come back in. So I'm feeling better about that. But this is a trader's life. Just get used to it. But here's that quite often you see this happen a lot, and it drives you nuts. But I think that we could actually even, like, if I was day trading this, I might say something like, I'm going to go short there, and I'm going to risk to a move to new highs. So that means that at 2-to-1, I got to make darn sure to pay myself. So that's basically there. This was 2.5-to-1 because it was, we're going to use a 50% level as our target. Regardless, I would have the open order to take profits at that 2-to-1. That hasn't been hit. But as I told you earlier, at 50% of the anticipated move, I have to move my stop to scratch. And if you're a lower time frame trader, man, you get stopped on these at scratch so often, it just makes you sick to your stomach. So, and it's just a trader's life. Just get used to it. If you want to trade lower time frames, you get stopped out at scratch a lot. And like I said, I mean, it is the landscape of this business. And if you don't like that, if you don't want to get involved in that, then don't go down the route of a day trader. Reason why 95% of the world cannot do this business of lower time frame trading is it is difficult. I mean, Chris is now a funded day trader with my old prop firm. Do you find that day trading is easy peasy? Anybody and their brother can pick up this? Chris, I don't know. Are you still there?
No, it's not for the faint of heart. It's not easy. It is challenging, but rewarding if you stick with it day in, day out.
All right, there you go. And are you right 100% of the time?
Absolutely not. I don't know if that's a thing, but if it is, I'd like to hear more about it.
35 bloody years in this game. I still haven't found out that damn secret yet. So, ironically enough, the secret is that when you are right, you make damn sure you get paid. And and actually, interestingly enough, just to show you, uh, I mean, this is my journal. Like, this is what I teach people to do. Notice, I mean, this is going back to last October. Every fucking day you're in there working, 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 working every single day. I mean, it never ends. This is a full-time job being a day trader. And every time you see one of these orange notes, that means I made a mistake. And oh boy, I'm not ready for prime time again. So, just understand this is not an easy vocation that you want to get into being a day trader. It's hard work. So the point is, and ironically enough, and here's probably, just on Friday, I banged out a really nice setup here in crude. This is a really good example where all I had to do was trying to identify the trend and get in on it. And you can see here's 2 to 1. At this point, I always like to put on 2 contracts. So at this point, I have to force myself to get paid. Now remember, I said at 50% of this anticipated move. So right here, I have to move my stop to scratch. And you can see that the market did try to didn't hit my 2 to 1, so I never got my profit fill. The market did start to ratchet back, and there was a very realistic possibility that I got stopped at scratch, and that's the end of the day. Market rolled over. It actually hit the 2 to 1 profit objective, and then it just kept going and going and going, and actually rallied right or fell off, sold off right into good old Johnny Hoagland's level. And this is why I love Mr. Hoagland so much. And I even told him, I said, look, I'll keep doing your combine. I'll pay you $50 a month for your levels because they're worth it. You need to get paid for your time and effort. He just gives these out for free. So, point of the matter here is this was like a home run trade. And this, ironically enough, is this only happens maybe 20-30% of the time. I would say another, 20-30% of the time we hit the 2 to 1s and then you get stopped out at scratch on the runner. I would also say 20-30% of the time you hit 50% of the anticipated move, you get stopped out on the whole thing. And then another, 30-40% of the time. And I am noticing that if I'm a little bit more disciplined and patient and, follow the rules, not so much, but still good 30 some odd percent of the time. And ideally, I teach people you want to try and be right about 66% of the time if you're lucky. But unlucky, I get stopped out. That would be what 33% of the time. This thing just goes straight up and boom, stops me out, and I have to take the loss. So that's a trader's life. It's not like this is cream and sugars and cookies and stuff just because you now know what a valid setup is. And frankly speaking, I think this setup is exactly the same thing as that crude oil. And this is what an hour chart, right? That crude oil, that was just a 3R chart. But the same logic. You pick your trade level. You got your 3 reasons to justify taking the trade. You've got your rules. So I've had at least 50% of the moves. So stops are at scratch right now. And you just got to live with the results. I mean, could this actually carve out a nice little inside bar failure here? And we dump, and that's the end of the rally. And then this is some big honking AB, CD. And then, after the profit objective is hit, 2 to 1, ding, 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 you take your profits. And everybody goes, oh my God, you're so awesome. You're so smart. And I'm going, no, I'm not. I'm not really that smart. I just identified a setup that I know that's worked repeatedly in the past. Then I force myself to take the trade. Then I force myself to obey the rules as the trade develops. I force myself that if this thing does come back, I'll get stopped at scratch. No big deal. But if this thing does roll over and hit the profit objective, there'll be a profit order at this level. blah, 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 blah. Just, just business as usual. All right, so I don't know whether that helps you understand the way the universe is a fractal and how lower time frame charts can look almost exactly like higher time frame charts. It's just really a question of you identifying what type of market participant you are. If you're trading off the daily charts, I'll call you a swing trader. If you're trading off of the weekly charts, I'll call you an investor. If you're trading off of like hourly charts, I'll call you a day trader. Look at what's happening here now. We might even get a sell signal as I'm speaking here to you. So it's just purely a function of what type of market participant you are and just identifying your plan. Like, what do you think the odds are this low here back up to that high? Oh, what a shock. That's a mountain man tag. That actually is a sell level. I mean, it's so cliche how this stuff works. So I hope that helps answer your question with regard to time frames. And maybe that gives you some food for thought. Look at that. That sell signal just fired. What is that? That is, oh God, old man-itis. I can't even see the damn screen. Oh my God, my eyesight is terrible. 68,086. And we're now sitting at 68,085. So look at that, an inside bar sell signal, exactly the same signal that just came in here. It literally is firing as I'm speaking right there. So, we could drill down to like, say, a 9-minute chart. Well, what does that look like? Oh, what a surprise. That inside bar sell signal off the higher time frames is an M. So there's the lower time frame guys going, well, if I ever see the market smiling at you, you know what it means. And there it is, staring you in the face. It's melting down as we speak. Isn't that funny? Okay, I think we'll leave the broadcast at that. I have to head off to Lily now. Sorry I didn't really interact with you guys on the YouTube chat as much as I normally do. I did start off talking to you guys, but unfortunately I got distracted and I didn't look back on it. So I'll make a concerted effort next weekend to interact with you guys a little bit more on the YouTube channel. But yeah, Andre, I'm long the turd coin, and the day I make a double on that, oh boy, you're gonna be hearing it on social media. All right. Okay, have yourselves a great day. PMA for the win. If you want to come and learn from TRI, I think actually the best thing for you to possibly do, the very first thing you do is sign up for the weekly newsletter. So this will give you a nice little in. You'll get a notification that the Broiler Chickens show is up and running. And of course, you'll be in the loop, and we'll send you updates and notifications that new school terms are starting and that kind of stuff. I mean, I would strongly suggest that you get the registration for the fall term done with while you can here, if you are interested in the education program. Because keep in mind, and probably a good FYI for everybody, I am going to be taking a couple weeks off here in August because I think everybody deserves a break every once in a while. And the last time I had a break was back in February. So point of the matter here is sign up for the newsletter just to get this. It's totally free. You're in the loop. Consider joining the site. We do have a free 30-day subscription, so you can participate in the daily brief calls and look at all the free material that we have on the website itself. And, just see if you can get into the groove. I have not seen any other site on the internet that gives such a robust education, from everything from you starting and running your small business of trading, expecting to turn a profit, what is the appropriate path that you as a new investor should take, all of the self-support tools that are absolutely mandatory that you must use and learn, journals, logs, demon finders, report cards, the whole damn thing. And then on top of, the tools to teach you how to run a small business of trading, we actually teach you things like technical analysis, the number of different ways that you can interpret price action, what do setups actually look like, what are the key criteria that are involved in building and using setups in the marketplace, what are the sort of general rules of thumb out of what should be in your setups, what are realistic profit objectives, what are realistic risk reward ratios, what is actually good money management practices from risk management perspective. As well, we teach in the education program, nice introduction to fundamental analysis, trying to understand where we are in things like demographic cycles and world history and the way different countries move given the different and respective parts of the cycles that we're in. I haven't seen an education program anywhere online that holds a candle to what we do. And I haven't even mentioned all the candy that we introduced to the level 3ers when you actually work with me directly and interpreting derivatives and harmonics. And actually, this coming week, we're going to be having fun. I only like to talk to advanced students about trading with the DOM and the market footprint and TPOs. And we have one of our veteran day traders on the site who's going to come in and have a great conversation with the level 3ers and myself on Tuesday about all the different tools that he uses on a regular basis day trading. So, point of the matter here is, if you want to learn how to do this, this is the place. I've been working in this business for 35 years. I've never seen any place anywhere hold a candle to our robust education program. So if you can take advantage of it, the price for this education is ridiculously cheap. And I think I better leave it on that because Lily is waiting. So have yourselves a great day. PMA for the win. Slow and steady wins a race. Take advantage of the free newsletter. Take advantage of the free 30-day trial. Just come kick the tires. And if you really want to learn how to do this correctly, get your butt registered in the education program for this coming fall and give us the opportunity to change your life forever. Have yourselves a great day. All the best. Hugs and kisses. And the only thing left for Brian to say to you good people is bye for now.